All right, guys, welcome back to the Independent Investor Channel. We're going to drop you into M1 Finance, and we're going to do an aggressive portfolio review for you guys, provide you some updates on how the portfolio's performed in the short term, give you guys some introduction to the functions and features of M1 Finance. I'm using it for a strategic goal here, fractional shares being just that. Please understand that the Independent Investor Channel is affiliated with M1 Finance. If you do click on any of the links or in the description of this video, the channel can receive a small compensation for you opting for their service. So please understand that. With that, guys, I'm going to kick you into the review and we'll dive into the portfolio. All right, guys. So I was asked to provide an update to the M1 Finance portfolio. This is one of two accounts that I have with M1 Finance. This is the aggressive growth portfolio. I'm trying to leverage the opportunity through M1 Finance in a couple of strategic ways. The other portfolio is my Spider portfolio. That's the one that I invest in the 11 sectors, and I split them up with a custom allocation. I share those links in the description in all of my videos. You guys are welcome to take a look at that. Just like that account, this account is 100% passive in nature. And I really want to foot stomp for any new viewer to these messages and the ones that I put out like these. I really want you to take away the intent behind these portfolio reviews, okay? First and foremost, this is a real account. This is an account that I've had through the downturn, and just here it kind of shows where this has been on its roller coaster ride at the March 18 lows. Went down to 4,100, and we've obviously made a nice comeback. I'm very, very satisfied with the performance of this portfolio here, up over $6,200.50. So it's doing what I want it to do, but I really want to stress to those that may be looking at M1 Finance as a potential broker to carry their investment accounts with. I really want you to hear it from my perspective, and I don't know if there's others that would agree or disagree with me on this, but me personally, I really think that you need to understand that M1 Finance is extremely conducive to the passive investor. If you're looking at trading in and out of stock on a daily basis, M1 Finance is not going to be the platform for you. And this was an opportunity for me to control my level of exposure to these higher than average growth names, companies that I wanted to invest in, yes, but I did not want to be trading in and out of these companies. I honestly feel like the best way to invest in an Amazon or a Facebook or even a Tesla, for example. I'm going to scroll down and show you guys the holdings within this. This is the aggressive growth portfolio, how it shakes out. I've had this account established since December of 2019, so not even a half a year yet. And you can see here the power of these investments. These are just killing it. I mean, Amazon up 40% since we took the investment. Google up just over 3%. It's actually went through a large swoon. Facebook is back up 12% as well. And bought all these at the same time last December. You can see there Tesla. I've doubled that position. That's been incredible. Not too often you get something that rises up over 100%. Got kind of lucky with that, to be honest with you. And my posture on Tesla has not changed at all. Okay, I'm going to go in and show you guys how little exposure I have to this company. But hey, $300 for taking a little bit of a spec play on Tesla. I know some people are going to not appreciate that comment, but for me, it really does kind of fall into the spec category, but I didn't mind mixing it in with some of these other quality growth names. For example, Facebook and Google specifically are very inexpensive. So from a basket of 12 stocks, I didn't mind putting a little bit more risk in it with a little more spec play and control that speculation by asking the portfolio to remain at 6% of the target allocation. You can see that it's run up to about 10% of the portfolio. It's represented in this offshoot here. I can just tell this is the Tesla offshoot here in the pie. But nonetheless, we'll take it. It's a win. You know, I'm up in 11 of these 12 positions, up handily, I might add. NVIDIA has just been fantastic. We cannot argue with that 50% clip. 35% to Netflix. Adobe Systems, which is probably really one of my secret favorites of this group. Adobe Systems is hardly belongs in a growth portfolio per se, but it is in the technology space, one of which I really wanted to have exposure to. Adobe is a phenomenal company, well run. Certainly one that I could hold in the larger portfolios, but opted to go ahead and just add a small slice of Adobe here in the aggressive growth portfolio. CRM Salesforce as well has finally come up. It went on a really large downturn into the low 140s, and now we're back again up positive in the position. I'm happy. Uber, Alibaba, Booking Holdings is on its way back up as well, and as travel and leisure starts to become a little more realized and pronounced as we come out of this and start to get back to some normalcy. And then finally PayPal, which has just been on fire, quite frankly. It's been on fire. So not too bad. 11 out of the 12 are up right now. We've obviously got a pretty good position here. The last thing I will show is I'll jump in here to the holdings section, and I just want to highlight here we're just over a third of shares of Amazon. You can see here almost a half a share of Google. So for new investors that are really like, wow, why am I watching this video? Well, you're watching it for a couple of different reasons, and I'll highlight number one, it's my personal portfolio. So this is real. This is a real application here, and I bring my account onto YouTube and share it openly, free of charge. But the real takeaway here is to understand that for a relatively small amount of money, I can enter into some of these larger share price company. If I were just going to buy Amazon right now, I would be paying over $2,500 a share. I think Amazon is hitting all-time highs as we speak during the filming of this video, but my average share price was $1,700, and that's because I've become passive on these positions. You can see here I really didn't get a great entry on Facebook, but Facebook is also hitting an all-time high right now at $230 a share. So just over 2.5 shares of Facebook, a partial share in Tesla, 3/4 of a share. That's the one that's up quite nicely. And then you can kind of see here how I've leveraged the opportunity of the partial shares. You don't always need to buy 5 or 10 share blocks. And that's the one thing that M1 Finance has really above a lot of its competitors, is that you can seek out this exposure to a lot of different names using the partial share benefit. I started this account with, I believe, $5,000. Yeah, back here on December 20th here. That was the inception. And then I think I contribute about $25 or so to this account every month. It's a slow, passive account, but just a unique way of entering into some of these hyper growth names in the stock market, and using the tool in M1 Finance, quite frankly, to deploy some discipline in investing in some of these companies. I maybe would be tempted to sell out of these otherwise, but because I've set up a nice program here through M1 Finance, it allows me to be aligned with my strategic goal of wealth building using these great growth names, at least in this portfolio, the way that I've built it for the long term, and just becoming an investor in these awesome companies. So with that, guys, we'll conclude the video. I'll kick you back to YouTube, and hope you enjoyed. Thank you so much. All right, guys, so we've come out of M1 Finance here to conclude the video. If it's your first time to the channel, you want to make sure and subscribe to the channel, leave your comments at the bottom, share the message with anybody out there that you think might be interested in the information. Guys, thank you so much for tuning into the review, and good luck in your investment future.